Hi guys, quick update here for the stock market. So just a few things I want to mention. First of all, if you want to join the group and you've been in the group before or your Facebook friends, you can just Facebook message me and I can send you the PayPal link. That'll be the only way to join the group. As of right now, I may have a website set up, but there's no immediate plans to get that set up for right now. Second thing to mention, I will be releasing a sort of a masterclass, which I've been working on for the last couple of years. The reason it's taken so long to get out is because I wanted it to be really good, and I did not want it to just be analysis videos. Okay, teaching people how to analyze charts is just half of the story. You have to take the analysis and move that into developing high probability profitable trades, which is why it's called Bridging the Gap, although the actual name is going to be Masterclass, but you get the point. The other part of the course, I don't really want to call it a course as such, is that I've also added in loads of quick modules of things that I've learned going back, well, more than a decade now, and really that's what it's about, because anyone can just Google Elliott wave or volume or how to draw horizontal line or how to trade between levels, but really it's the experience that counts as well, and it's knowledge. Applying that knowledge leads to experience, leads to that sixth sense or that intuition. And I know a lot of people in America who follow me, they're more used to futures and options, but you can't just jump into an options contract without knowing how these options work. So there's a good 10 modules just on futures and options. Now technically the masterclass itself I could have released as separate masterclasses, but I don't want to bait and switch anyone. I just want to put all of my work into one big giant course. So there's well over 50 modules there, and it's work that's been acquired over the last 10 years. So expect that to be released at some point over the spring, summer. But I think it's going to be very, very useful. And as you know, from day one of doing these videos, I've never BS'd anyone. I've never hyped anything. I've given my honest take on what I think is going on, and I will be doing that today as well with this video. So hopefully you guys will find that interesting. So that's something to look forward to, because I used to have a Shopify store, but I found over time it was just individual modules, and sort of I wanted to just rework that entire thing and just put everything into one sort of package, really, because you never know what's going to happen tomorrow. You never know, this might be my last YouTube video. I might not have the group tomorrow, so I just really wanted to put something out there. Not so much as like a legacy thing, but just to have something out there that's out there, and then hopefully that'll be a timeless classic like Illmatic 94. Anyway, so expect that to be released. Now, stock market, basically this is the situation. So let's try and get our heads around. First of all, this is the most incredible move of all time, bar none. Never have we gone from all-time new highs to a bear market this quick, okay? And it's happened so quick, it's not given anyone any time to really react to this. And I went to cash 2 weeks ago knowing something was right, but I never thought, and even then I was 3 days late because I knew something wasn't right. I mean, we got rid of Bitcoin at 10k, but Bitcoin, a sell-off in Bitcoin is always going to give you a heads up to what's going to happen in the stock market. There's a correlation there that, although it's not one-to-one, it's a marker of liquidity. So this Bitcoin chart is far, far greater than just, Bitcoin going to 50k tomorrow. There's a lot more, there's a lot more to look at with that Bitcoin chart if you know how to use it. But with that being said, I did not expect 36% crash within 3 days. Well, what felt like 3 days, but in fact was actually just 2 weeks. Now, the government have jumped in yesterday with this testing, which I did expect to occur. That was very much expected. And now we have the Federal Reserve on Wednesday. So if anyone's going to save this market, it's going to be the Fed. And whilst this monthly candle, I mean, it was looking horrible. Right up until half an hour before, a very obvious short squeeze. I mean, we can just go into this. This was just very, very obvious. If you know how to catch these knives and understand how these moves sort of work, this was very, very obvious. And I will, of course, there's a whole big module in the course about how to catch knives and how to take advantage of a short squeeze. Okay, the most violent move is always going to be a short squeeze. Now, this has saved somewhat the monthly candle, and there's still another 2 weeks. Whereas if this candle, let's say on the Dow, gets above 24/7, that is actually looking like a much healthy candle. So we have to wait for the Fed, and we have to wait before we jump into anything long term. Now, obviously, if you're trading this market, that's a different story. And I've maintained, certainly from 3 weeks ago, there's no real, it's either cash or it's trading this market. Okay, the VIX, which we'll get onto in a minute, is still high enough to not really justify any long-term position right now. You're a very brave man if you're adding to long-term holds here. It's best to wait this one out till we at least get a higher low and some kind of conviction that this market is going to go higher. But of course, from a trading perspective, if you took part, that's the biggest short squeeze in human history. So that never has the Dow moved 2,000 points in a day. So if you know what you're looking for, there's big opportunity. But honestly, if you don't know what you're doing, or you're not used to a VIX of 60, it's best to stay in cash. Cash is also a position. Now, where is this market going to go? Well, let's cover the bullish count. So let's get out of the Dow here. Let's go to the S&P. So, well, let me just take this off. So the count, as you know, sooner or later, we are going to get a 90% correction that's going to take the S&P to here. So we know that. We can't pretend we don't know that, because I've been calling for that for well over 2 years now. I did not think it was going to happen this soon. It seems early. It seems early for various reasons, not just fundamental economic reasons. And the current news flow, it would be odd for that particular news flow to cause this 90% correction. But we're all humans here. We're all, we're not little kids. We know sooner or later that is coming. And the reason it's going to be a 90% correction is because we are correcting the entire move from here, from this 29 low. Because that is, for those who have not seen my videos, but I'm guessing many of you have, let's just rework the count. 1, 2 into 42, 3 into the 4. And here, this is where the baby boomer rally started. 1 into 87, 2 into 87, 3 into 01, 4 into 09. And this was always the wave 5. And then we're going to get a 90%. Because when you're correcting multiple degrees of trend, you end up going to either the previous wave 4 or wave 2 of the extension. And wave 2 is the 87 top, is here. It's not this wave 2. It's not the Greek crisis wave 2. Even then it will be a 1207. I mean, even then it's a 66% correction. But actually, I think there's a very real possibility when the big one does come, assuming this is not it, and obviously we'll get into that, we're going to break these lows and go to here. And of course, wave 4 off the extension is here, but I don't think we get as low as that. That seems unlikely. But wave 2 off the extension is here. And you just need to look at Bitcoin to know these parabolic moves, they don't end well. When they do kick off, they kick off big time. And as always, as I always say, get out of the log chart and look at this on the regular chart. If that doesn't look like a Bitcoin or a Verge move back in 17, I don't know what does. Shout out to all the Verge fans, you know who the man is. Okay, so we know this is coming sooner or later, so we can't just pretend that's not there. Now, the question is, have we made 5 waves up, yes or no? Well, let's talk about this. First of all, let's talk about let's just split it up here. I think this is the best way to do it. So let's say this would be we are still bullish, as in we are still in this cycle, and we are still going to go higher, and we'll talk about that. And one is the market's already peaked and we're now bearish. And like I said, the bearish count is very, very bearish. So either we are a little bit more bullish or we're very, very bearish. I don't believe in anyone who's calling for, the Dow or the S&P is just going to correct these 5 waves. That's not possible. I don't think if you get as low as 1474, you're going to go all the way. So this is the issue with this move. This move is much it's all happening now, or we're going to go higher and then it's going to happen. But make no mistake, we are going to correct the entire move from 1929. And obviously, there was a market prior to this. The market, NYSE, actually was formed back in 1792. And then the question comes, well, let's just cover this now, just so it's out there. Is the 1930 high a wave 1? Is all of that a 2? And is all of this a giant 3? And then we're going to go into a 20-year sideways generational bear market, and then we go higher? Or was in fact the 1939 a wave 3, this is a 4, in which case it's a wave 5 on an even higher degree, in which case we're going to go even lower. But either way, whether it's a 20-year wave 4 or whether it's a giant wave 2 grand super cycle, this is the kind of level that we're on now. We're kind of moving up to here. We're not a sub-millennium. That would be silly, although technically if it's 5 on a sub-millennium, I suppose, but we're on this sort of super cycle, grand super cycle sort of stage. This is where we're at. We are correcting these two. We're not correcting just a cycle here. We are correcting in this sort of level, which is why when it does happen, it's going to be really big. Anyway, sorry, I've taken all that off there. Yeah, let's just go back to it. So I've already put this out there. A lot of my work over the last, 5-6 years especially, although really going back a decade, has always been down 40k, 2k. So it shouldn't be surprising. Now, have we made 5 waves up? Well, let's just talk about the bullish counts, i.e. we're going to go higher. So first of all, the high in the ES, obviously this is the SPX, the high in the ES was made in the overnight session. Okay, that's the first thing. Let's just go over this. So that is not a secure high. Typically, especially if you're going to correct a 90-year bull market, I would say it's unlikely for the high to be formed in the overnight session, which means eventually that high gets taken out. Now let's go back to the other chart. So that's the first thing. We are going to eventually break this high of 3391 simply because of the fact that the market cannot, it's unlikely for an auction to end in the overnight session. Certainly every single overnight high since the lows in 2018 have been taken out. Now, what's happening with this computer here? So let me just... Right, everything just died there. Okay, so we're now back online, which is good. So that's the first thing. The first thing is the ES high. ES high is a little bit debatable. Secondly, in terms of price and time, let's be honest here, we are early. Because I wasn't expecting this cycle to end until 2026. That's the business cycle. The market cycle is different. The market cycle usually peaks at least 18 months, if not 2 years before the business cycle. But let's call it 3 years to be safe. So going off knowledge of cycle theory, which is obviously very, very important, technically this stock market could get dragged out to 2023. Had this peak been made, let's say next year, then I would have said, right, that's it, that's the big one, time to call it a day. But technically, in terms of both price and time, we are a little bit early. Hence, that justifies, alongside the ES high, this market is still bullish. Also, it's unlikely for the current news flow, I think, to cause a 90% correction. I think that kind of panic, whilst it is possible, I don't think it's enough to cause the big one, because usually a super cycle crash on this degree, unless this current news narrative gets completely out of hand, and we're talking something, serious here. We're talking, cities on lockdown, martial law, that kind of thing. We're talking some serious consequences. I see it still regardless of what the market has done the last 2 weeks, still I see it as unlikely it can cause a 90% super cycle degree crash and thus the end of the world. I think that's unlikely. Usually a major crash would be a complete breakdown of the financial system, which, as we know, is going on. We know Europe has a major dollar funding issue, and there's liquidity issues both inside the US and outside the US, especially in emerging markets. But for those markets to suddenly break down in the space of 2 weeks because of this current news narrative, that is unlikely. Things take a while to break down, like in 2008. There were serious problems prior to this that you could easily have clocked onto here. I mean, the system started breaking down in 2006. What they blamed it on, I mean, obviously it was more than just a subprime issue. It was a euro-dollar issue, let's be honest, as was the 2011 thing. I mean, it's always going to be a euro-dollar issue. That's the big issue that we've had since 1970, which no one really knows about. But anyway, let's assume it was just a subprime thing. The point is, the problems were occurring before the top, and you saw that a mile off, right? If you watch the Big Short or great videos around the time, it was clear what was going to happen a mile off, which is why intelligent people were legging it well before this top, a good month prior. And we've not really had that there. There's nothing in the property market which would suggest to me that an imminent top is going to happen. There's certainly a viewpoint that this cycle is not over, so you could regard this as a mid-cycle bear market. So those are the bullish reasons. 1, it seems early. 2, there's no economic fundamentals behind this move down, I don't think, because breakdown on that super cycle level takes time, and whilst it has, you could argue, well, it's already taken 11 years. Well, guess what? It can still go longer. And the fourth thing is, I don't want to bring politics into this. I'm not really a politics sort of guy. But, to get a 90% super cycle correction 6 months before the US election, that's unlikely. So, those are your bullish counts. Now, what is then the count for the bullish thesis? Well, let's clear all that off, and then we'll introduce the bearish count. So the count would then have to be something along these sort of lines, which is going to be a 1. Now, I've always had it as a 2 was here, but I can appreciate an ABC2. I'm happy with that. I just think that's a little bit extended, or you could argue this was a little bit extended, but I like this as the 2, this as the 3. So it'd be 1, 2, 3, 4. And that is a 5 into a 3 here. Then this is the 4. And this I like more because there's alternation between this short and sharp wave 2 and this sort of expanding flat wave 4, which basically sets up the final, wave 5 or 5. So technically this move here was still a corrective move. Now, I will show you a bearish count, which actually says this was the 4 and this is the 5. But let's just stick to the bullish count. And that then also makes sense in terms of price and time, i.e. Dow 40k, S&P, let's say 4,000. And in terms of the horizontal axis, we drag this cycle out another couple of years, and then we get the big one. And typically, markets will peak with some sort of topping pattern. So Bitcoin, parabolic, classic Wyckoff distribution, where I was banging the tables all week long and all month long saying, look, it's getting a little bit dicey up here, be very, very careful. Next thing you know, we're at 3k. Okay, and anyone who sold Verge at those prices, that's easily the greatest investment you're ever going to have, bar none. So, those who have been around know that was a good call. So one is a parabolic, and then this. One is a head and shoulders, and one is some kind of wedge. But you see these topping patterns from a mile off. And one of the things that I do very, very well, which is the whole point of this game, is to forecast what the future is going to bring. And we would have seen this a mile off. I did not see this coming. obviously you still have to act, because you never want to be a rabbit in the sort of headlights with this game. If something doesn't look right, just go to cash. I'm never going to hedge in gold and bonds. I mean, look what's happening to gold. As per my last video, I mean, it's going to go to sub 1k within probably a year. So, you know, and silver, well, let's just cover it. Well, okay, I just want to keep it focused. Let me just keep it focused. But yeah, that's going to go to $10. And good luck to the hero on Twitter who was sort of laughing at that. So yeah, 3, 4, 5, and that is the count. But you know, markets peak with this sort of wedge, and we've not really had that wedge. And you can see these wedges coming a mile off, which is why, you know, you've got at least 3 to 6 months to plan for what's going to happen. So that would be the bullish count. And for all the reasons that I mentioned, we still go higher, and the Fed are going to jump in and save this day. Now, let's talk about the bearish count. So the bearish count, as far as I'm concerned, gets the Dow on a super cycle degree wave correction to 2000, and it gets the S&P to below the 2008 lows. And the count would then have to be that you're basically forcing it. You're not blagging it, but you're forcing it. And you are forcing it, because there's a 1, 2. I don't believe 3, 4, 5. I don't believe that. I don't think this is enough for the 3. I believe this is the 3, this is the 4, and basically the reason you're blagging it is because just eyeballing this, if you were to show this to anyone, how many clean waves can you count into here other than this? Obviously it's going to be 3, but the way you can get 5 into here is if you say this is your 2. And I've tried, this is the only way that it makes sense. 1, 2, 3, and either 3, 4, 5, or 3 running flat 4 and then 5. Now, does that look right? Well, first of all, does it fit the Elliott wave rule set? Well, the answer is yes, because we only have 3 rules in Elliott wave. Wave 2 can't cross below, you know, the start of wave 1. 4 can't go into 1, and 3 can't be the shortest. So technically yes, but does it look right? Well, even if the wave 4 is here, it's, you know, it's a bit of a strange quick sharp wave 2, quick sharp wave 4, and then if you say here, well, that's a very large wave 4 compared to a very short wave 2, and the wave 5 seems like you're kind of stretching it, but it does work because that doesn't cross here, and wave 3 is not the shortest. But just looking at this wave, you know, you're kind of forcing a 5 wave count into it. It doesn't feel complete. Had we even had just this, a quick wave 4 here and one more push up, then I would have said, right, that's it, time to call it a day. Because then I could have said, right, that's the 1, that's the 2, that's the 3, that's the 4, that's 5. Technically, even that's not right, because it should have been a 3, 4, 5, 3, 4, 5, then it's the big one. But even if we had this, I would have said it was fine, and everyone was expecting this to be a triangle, myself included. But that would be the bearish count. The bearish count is you are forcing 5 waves. You are also saying that this current news narrative is bad enough to cause a 90% correction. It's not the fact that it's going to just correct to here. That's not going to happen. The big one's going to be here. So I don't think that's possible. I think you're forcing 5 waves into here. There is a lot of capitulation as of Thursday, a lot of capitulation. That was the first time that I saw panic, and guess what? The market bounced on Friday. So, you know, we're basically stuck between a rock and a hard place. Right now, I think, honestly, my own opinion is stay in cash, or if you want to get involved here, you need to know what you're doing. And if you don't know what you're doing, if you're not used to a VIX of, I mean, it's 57 now, but it was 70 just 24 hours ago, you need to just stay away from this market and not get too involved, because guess what? You're going to end up losing a lot of money. And this move down, because none of us who knew what we were doing, no one, it's likely the people who lost money here are the ones who know what they're doing. That's what I'm trying to say. Because everyone who knows what they're doing knows this seems early. it seems early in terms of price and times, and the economic fundamentals aren't bad enough to justify a 90% super cycle correction. So that is just something to know. That's why, we're not really expecting this, but that would be the bearish count. The bearish count is then you're forcing a 5, and this move down is an incredibly bad move down, because this is the start of a nasty correction here, and this is just, fine, it's an ABC into here, but that could just be a 1-2 1-2, and then what you're saying is we're going to have this. What you're saying is this is coming, and it's going to happen here pretty quick. Something like this is coming, as in much worse than just bouncing off this 2000 level. So at the end of the day, if you go as low as 2000, you're going to go all the way. So that is it. And the short term, I appreciate not a lot of people are buying this, and I am concerned that a rally as vertical as this, I mean, it was a great rally. It's the biggest move of all time. So if you know how to make money out of it, it's great. But it's concerning only because the biggest vertical moves tend to be in a bear market, as we know with Bitcoin. Bitcoin has had some of the greatest moves vertically upwards in the last 2 years, which have been far greater than the entire 5-year 1 million, 10 million% move, which is really saying something. Okay, unfortunately, that's how bear markets work. So we have to see how this plays out. We have to see what the Fed does. So really, I'm leaning bullish, but that is on the background of the Fed jumping in and saving this day, and this monthly candle getting above at least 2800, at least getting back above these levels. What I don't want to see is this is just an oversold B wave, because that then sets up, regardless of my personal opinion, you can't argue with the markets. If this ends up becoming a B wave rally, well, guess what? Your volume POC, well, I mean, I suppose it's at 3,000. So any move above 3,000, that is definitely bullish, I feel. But it could just be a B wave rally, and then we're going to set up this move. So really, it's still quite uncertain times, but you don't have to be in a position. At the end of the day, if this market still has another 2 years to go, missing 1 week isn't going to change anything. And if you want to trade this move, well, trading's great, because you don't really care if it goes up 100% tomorrow. If it crashes 90%, you're going to make money either way if you know what you're doing. And if you don't know what you're doing, it's best to just stay away. But long-term investing, that term, I mean, the minute I saw this way back after when Bitcoin did its thing, I was like, right, any long-term holds need to be taken very much with a swing trading mentality, and really everything is just a day trade, especially right now. So that's my honest take. On what the markets are doing. And the VIX, well, it would be concerning if we get as high as this, but definitely it looks as though we've had quite the sell-off here. But this VIX, we need to see follow through, right? The most important thing in this game is follow through. So a 9% move in the S&P on Friday, if that doesn't get follow through, as in VIX going down, S&P going up, well, that then sets up more concerning issues that we end up actually coming back down and testing these lows. So I don't really want to call it either way. I'm just giving you the bullish count or the bearish count. But if I had to say something, it is that cash is king. If you don't know what you're doing, you can't trade these sort of moves, stay away. And if you do want to take part, well, guess what? The VIX is 60, so your position sizing has to be basically 1/4 of what it was before, and your stop has to be widened, and the target that you're aiming for has to be the first obvious pivot level. You can't aim for anything long term, because you could be aiming for you. So in a normal VIX environment, aiming from here to here, well, guess what? It's going to hit here, here, and here. It's going to do this, whereas before it was just doing this. So you got no choice but to reduce your targets, reduce your positions, and widen your stops, because now we're overshooting all of those stops. So that's just how you trade a high VIX environment. So that's my take. Make of that what you will. Like I said, if you want to join the group, you know what to do. And the other thing, very quickly, that I want to mention is supporting the thesis that stocks are eventually going to roll back up here, and that bonds are selling off, as per my video. You know, the whole bond collapse, Bitcoin collapse, and gold collapse, and also gold is selling off. And gold has always been in this larger, you know, WXY ABC, and the target's going to be 919. And then silver, you know, you're looking at $10. So certainly there is an argument to be made that there is, you know, there is movement in these other asset classes, but the problem that we're having is the stock market needs to bounce. Otherwise, we're dealing with a quite concerning move where everything is selling off, and you never want to see that. A pan sell-off is usually more concerning, because a pan sell-off is very much like a 2008 where everyone's just legging it from every market. And oil, well, we need oil to bounce. As oil goes, the market goes. So if yields go up and oil goes up and stock market goes up, bonds go down, gold goes down, well, guess what? Great. We are back on form. The problem with oil is there is actually a very bearish count on oil as well. It doesn't have to be this count, but that would be the bearish count. That it's a 1-2. This is still in the midst of a 3. It's making a lower degree wave 4 before it goes down for a 3, then a 4, then a 5. And if oil ends up playing this out and the Fed aren't, you know, going to play ball here, and all we get is a B wave rally, well, that then means the stock market's going to go lower. If not, then this is a WXY complete into here. The lowest we're going to go is 26. Fail at this level, shakeout pattern, and then we go back up again. So it's very difficult times right now. I don't think, you know, many people should be taking part here. You know, and the Bitcoin move, well, yeah, I suppose we can just cover this. Well, you know, I mean, I'm still bearish. I've got a preliminary count, given what's happened. It's probably an ABC, but I don't feel this is any sort of low other than just short covering rally, which you would expect. And, you know, we're now, you know, we could do a back test of 64 level, 74 level. So we could easily do a back test of any of these levels up here and just end up rolling over again. And the futures gap did not get filled on this push down. Had that gap got filled on this push down, I would have been more confident in this being some kind of short-term low, but I'm not even confident this is even a short-term low. So really, that is the situation. What can you do? You know, nothing is quite clear. And which camp are you in? Are you in the camp that this is the big one, which some of you, and I know many people are hoping for that, but you know, people have been hoping and saying that since 2011, and I've been warning of it, sure, but I've always maintained a bullish count. I've called this market 100% accurate to the dot, up until basically a week ago. So, but even then, you know, I just went to cash. So, you know, what count are you in? You know, which side of the market are you on? If you are saying the market has topped, you are saying this is going to happen, whether you like it or not, right? You could argue, you could say to yourself and kid to yourself, oh, it's an ABC correction and it's going to be correcting this wave, and you know, we're never going to break this 666 low. But guess what you're really saying, if you knew Elliott wave, is this. So you need to ask yourself, first of all, are you ready for this? Because nothing is certain in the stock market, everything is probabilities. That's what you are saying. And if you're not of that opinion, if you think, right, property probably still needs to eke out some more, you know, gains, there's nothing to suggest that that market's going to dump any minute soon. And the bond market, I just think, is correcting. I don't think this is the big bond collapse. And the dollar index, you know, I was expecting this to go significantly higher because of the euro dollar issue. So looking at it, you know, from these other markets, I think actually this is just a mid-cycle bear market that eventually somehow we're going to magically turn over here and go back up again. So which camp are you in? I don't know. I have my own thoughts, and I'm leading more towards it's not quite over yet, but we have to see how this week plays out, and more importantly, how this monthly candle closes. And, not to beat a dead, horse here, but let's just go over what would be the most extreme bearish but still bullish count. Well, then it would have to be this. I mean, I just don't like this count. I have seen it, but I suppose it works. There's nothing wrong with this count. I'm not sort of debating it. I suppose it works, but I just think if we break these lows here at 2305, and then the next logical, because there's no volume here at all, is going to be at 2000. Can we come back from that? I have my doubts. I don't know. Can we come back from a 37% correction and say, look, this was all a huge A, B, C, D, E triangle that we've been in the last 2 years, and still this market goes higher? Well, possibly. So, yeah. Anyway, those are just my thoughts. Obviously, the VIX is 70 here, so 60. So we need that VIX to go down if the market is going to go higher. But because the VIX is so high, any opinion that you have, guess what, is going to change the next minute. So really, Monday morning, my opinion could be completely different. But here, I've given you more of a long-term perspective as to where we are and where this current news narrative fits in, and really the market will define the news. So that's basically how it works. If the market corrects 90%, then the news will get bad. If market goes back up again, things are going to go back to normal. Whilst these economic issues in the background, which no one really discusses or knows about, which is very much expected because the financial media are never going to tell you about what euro dollars are and what's really going on, they will have more time to play out as the market diverges and continues to go higher, and then we get the big blow off top. And the last thing to note is, the last thing I just want to point out here is, before this parabolic move in the Nasdaq, long-term capital management, which many of you may recall, those in the older generation, called it a day here. The Fed jumped in, saved the day. Here, everyone was like, right, that's it. It's all over. Big hedge fund has gone bust. Next thing you know, there you go. 372% move in basically 12 months, and then a blow off top. And that's really what I wanted here. I need a proper, Bitcoin postman pat blow off top where everyone has jumped on here, and then I can say, right, then this market has topped. And the count on the Nasdaq, it's gonna go to sub 1,000 when it does happen. And even on the Nasdaq, it doesn't look complete because the wave one actually started here. So on the Nasdaq, it definitely doesn't look complete, because that is the one. The one didn't start from here. It's the three that started from here, and it's probably all still a 4 of some sort, and then we look 5. So I don't even think on the Nasdaq the count appears complete. And on the log chart, well, guess what? That could still go parabolic. Sorry, on the non-log chart, that can still go off on one. Like it did here, and then we call it a day. And certainly the way Apple and Microsoft are moving, well, they're not breaking down. It did look a little bit dicey there, but guess what? We're on the log chart here, and technically that line has not been invalidated, and if anything, we formed a wick. So, and there is a higher target. So that's it. I'm going to wrap it up there because I'm just going around in circles now. But those are my views. That's my honest take. Like I said, watch out for that masterclass website. Not for now. If you want to join the group, you know what to do. And be careful out there. If you don't know what you're doing and you don't know what a short squeeze is, and you're following too much of the news, and Jim is sort of telling you what to do, and you don't really know how to play people like Jim Bob, then best you stay away from this market, because this market is not for people who don't really know what they're doing. Okay, if you're not comfortable with the market either dumping 90% from here or going up 100%, well, you need to stay away till the VIX goes down to its historical average of 15, and then we get some kind of resolution to everything, and then we say, right, we're going to do this. But right now, this is 100% a trader's market. There's no room for investors here at all. And if you want to take part, guess what? You better read that risk disclaimer.